Hello everyone, welcome back to Yasar Ozey's Market Notes. This week the market story is not simply about whether prices went up or down. The real story is about a gap. On one side, we have global markets showing strong risk appetite. US equities remained powerful, the dollar was relatively weak, the euro gained strength, and long-term US yields eased from higher levels. But on the other side, Turkey still has a very different market reality. Local rates remain extremely high. The BIST 100 had a shortened trading week because of the Eid holiday, and even though Turkey's risk premium looks more controlled compared with previous stress periods, the domestic financial environment is still tight. So the main question of this week is this: can Turkey benefit from the global risk-on environment, or are local financial conditions still too restrictive? Let's start with Turkey. The first technical point is important. Because of the Eid holiday, Borsa Istanbul was closed between 27 and 30 May 2026. On 26th May, the market had only a half-day session. So when we talk about the BIST 100 this week, the official final trading close was not May 29th, it was May 26th. And that official closing level was 13,662.75. This matters because without that calendar adjustment, the market picture can easily be misread. The Turkish equity market did not complete a normal full trading week. So, we need to interpret BIST performance with that limitation in mind. Technically, the BIST 100 picture was not strong. The weekly RSI was around 42.9, and the technical summary pointed to a sell or strong sell zone. The key resistance area was around 13,764, then 13,818 and 13,851. On the downside, the important levels were around 13,644 and then 13,590. So for the BIST 100, the next signal is quite simple. If the index can recover above the resistance band, a reaction area may open. But if it stays weak below support, the pressure can continue. Now let's move to the currency side. USD/TRY was around 45.8575 at the accessible weekend market flow. But the technical picture was interesting. The weekly RSI was around 24.5, which means the short-term technical reading had moved into an oversold or strong sell area. In practical terms, this does not mean a directional prediction by itself. It simply means that the short-term technical structure had shifted toward downside correction pressure. The relevant resistance band was around 45.8955 to 45.9070. If the exchange rate reclaims that area, then levels above 45.9150 can come back into focus, but if the rate remains below the 45.85 area, the correction may continue. Now, the real pressure point in Turkey is not only the exchange rate, it is interest rates. Turkey's 2-year benchmark yield was around 44.270. The 10-year yield was around 35.720. These are still very high levels, and technically, both curves were still showing upward yield pressure. The 2-year yield had a weekly RSI close to 56, with the technical summary in strong buy territory. The 10-year yield had a weekly RSI close to 54, also with a buy or strong buy technical reading. In bond markets, strong buy on yield does not mean good news for financing conditions. It means yields are technically strong, and stronger yields mean tighter local financial conditions. That is the core constraint for Turkey. Even if global risk appetite improves, high local rates can still limit the transmission into equities, credit, and broader domestic financial assets. The CDS picture was more balanced. Turkey's 5-year CDS was around 250.71 basis points. This level looks more controlled compared with the March-April stress period. But the important threshold is clear. If CDS can stay below 250 basis points, the improvement may continue toward lower risk premium levels. But if it moves back above the 255 to 260 area, renewed widening risk comes back into the market discussion. So Turkey's summary is this: the exchange rate is relatively stable, CDS is more controlled, but local bond yields remain very high, and that means the domestic market is still operating inside a tight financial regime. Now let's look at the global side. Here, the tone is very different. The S&P 500 closed the week at 7,580.0 2006. The Nasdaq 100 closed at 30,333.18. Both were highlighted in the market flow as record or near record closing areas. The technical structure was also strong. The S&P 500 had a weekly RSI around 64.5 with a strong buy technical summary. The Nasdaq 100 had a very similar RSI, also around 64.6, again with a strong buy reading. For the S&P 500, the key resistance area was around 7,582, then 7,592, and 7,598. If the index can remain above that area, the upward momentum can continue. But below 7,565, a short-term pause or pullback risk increases. For Nasdaq 100, the critical level was around 30,321. If closes remain above that level, the next resistance zone around 30,382 and 30,426 comes into focus. Below 30,216, a correction toward lower support levels becomes more likely. So, the global equity message is direct. Technology-led risk appetite is still strong. But this equity strength is not happening in isolation. The US 10-year yield was around 4.453. The dollar index was around 98.85 to 98.91. EUR/USD was around 1.1660. This combination matters. A softer dollar, a stronger euro, and some easing in US long yields usually create a more supportive environment for global risk assets and, in normal conditions, for emerging markets. But the key phrase is in normal conditions. Turkey's local conditions are not normal from a rate perspective. Local yields remain high, and this reduces the ability of Turkish assets to fully absorb the positive global backdrop. This is why the week's main market contrast is so important. Globally, the investor's shoulder is turned toward risk. Locally, Turkey is still looking at the market through the lens of high rates and selective risk appetite. Now let's briefly touch commodities and crypto. The data picture is more fragmented here than in the main macro assets, but the broad message is still useful. Precious metals remained at high nominal levels. Gold was referenced around $4,542.40 per ounce on a front-month or continuous basis, while another general quote flow showed $4,593.00. Silver was around $76.17 per ounce. The basic observation is that precious metals are still holding elevated price levels. In crypto, Bitcoin was around $73,256 based on the nearest accessible late May 29th quotation. The weekly RSI was close to 49.9 and the trading view weekly view pointed to a sell reading. The key Bitcoin support area was around 72,500, then 71,400. On the upside, 74,000 was the level that could weaken selling pressure if reclaimed. So the crypto message is not a clean risk on confirmation. Bitcoin remained under pressure, and the 72,500 area stood out as a key defense band. Now let's put everything together. This week's macro picture can be read in one sentence. Global risk appetite is strong, but Turkey is still constrained by local financial tightness. That is the market tension. The US equity market is strong, the Nasdaq is leading, the dollar is weak, the euro is firm. US long yields have eased somewhat. But in Turkey, the BIST 100 had a shortened week, local yields remain high, and the domestic market is still trying to price assets inside a tight financial environment. So next week, the key question is not simply whether global markets remain strong. The real question is this: will the positive global mood transmit into Turkish assets, or will local rates and risk premium continue to dominate the pricing mechanism? That is the framework I will be watching closely, because in markets, direction is important, but transmission is even more important. And right now, the global signal is supportive. The local channel is still restricted. That is the main story of the week. If you found this market breakdown useful, subscribe to Yasar Ozey's Market Notes and follow the next weekly update. Because in periods like this, the real value is not only tracking prices, but understanding which forces actually drive them.